All right, what up, guys? My name is Dejan, TJ, prolific one you don't know. Today I'm gonna be going over US30, just basically analyzing price, nothing doing crazy, isn't it? Or shall I say, not doing nothing crazy. They eat some mango and black pepper with salt, shish slap. So please mind me munching right now. Yep, let's get to it. Um, so right now we're on the daily time frame. What I'm seeing currently, we took out this old this old high right here for buy side liquidity. Short-term high. Market broke down, traded back up, made another sweep above these highs, traded into this order block over here. Coolio. I'm really targeting these lows down here though. I'm looking to see if price could, potentially make a run for these lows and even possibly dig deeper into these gaps, fair value gaps down here, so on and so forth. So I am bearish on this particular setup. For our so on the 4 hour, I do see this fair value gap. We have these relatively equal lows down here. Now, mind you, right here, it was kind of tagged. So I saw liquidity taken from these lows right here. And buy side liquidity taken from these highs right here. Inside of the fair value gap. Now, it's a matter of, I want to see if price will essentially go higher up into these areas, or if we're going to just respect this fair value gap and keep breaking down, being that we did have that market structure shift on the daily time frame. Now I'm just looking for areas in discount that price could potentially move to from this low up to this high right here. Anything below 50%, which is this area right here, and I will annotate that using this line. Anything below 50% is considered to be in a discounted market. And what I can see right now is this fair value gap as a potential target if we are to be bearish. Extend that out in time. Cool. Yeah. Now, another thing that I'm seeing, liquidity from this previous consolidation, resting right here. Right, conveniently below 50%. There we go. And now, if I should remove my Fibonacci, we have it a little bit more cleaner. All right, so that was the high that was created. Cool. Relative equal lows right here. And if you're wondering what these two lines are, these are old, this is the high and the low of a weekly fair value gap. I will show that to you guys right here. So we have the high, the low, the weekly fair value gap. Excuse me. Oh man. Sorry. Ooh. Me. I had to pause the video just now because allergies, bro. So all right, cool. So I mean on the weekly time frame, it is a lot cleaner based on what I'm saying. We have sell side liquidity right here, buy side liquidity right here, taken. So now we have low, the high. I'm looking to see if price could potentially come back down into these areas. We have these two fair value gaps or imbalance, whatever you want to call it. And we also have this swing low right here. So I'm looking to see if we're going to continue to be bearish, trading down lower into even these lows over here, so on and so forth. Excuse me. Now, let's see. Back to the 4-hour time frame. All right, so we took buy side, took sell side. We still have this major swing low right here. I would say this would be like an intermediate to long-term low. See, yeah, so we filled this fair value gap over here. So this would be an intermediate term low, intermediate term high. Now, price should not trade back above this, hopefully. So let's see what we can find on the 1-hour time frame side of that fair value gap. All right, so on the 1 hour, you can see these yellow boxes represent my Asian session. So what ICT states initially, the first I guess you can say poke above or below the Asian range would be your initial fake out. So I'm show you exactly what I mean. I'm not even gonna go back. All right, cool. So we have the Asian session high right here. And Asian session is from 7 p.m. to 12 midnight. So Asian range high right here. Then we have the low right here. Now we have the initial fake out. This was at 3 p.m. or 3 a.m. in the morning, excuse me. And we have a high created at 7. So remember, ICT says the low or the high of the day usually forms around 2 to 5 a.m. in the morning during London session. And you can see at 3 right here, 3, 4, 5, we basically got manipulated to the high of the day. Now let's see if we can go back and find ways on which we could capitalize on that. I'm gonna drop down to the 15-minute. All right, cool. So I'm gonna highlight my time frames in which I trade, which is the 8:30, midnight, or midday, excuse me. Then we have the lunch hour, which is from 12 to 1. There's no trading during then. And then we have from 1 to 16:30 when the market officially closes. All right, so I'm just gonna let the trade play out. All right. But before I do that, let me see. All right, boom. Price just took out liquidity from this high, traded down, created relative equal lows at these lows in the form of sell side liquidity, as you can see. Get that a little brighter, change the color. Cool. Buy side liquidity taken, sell side liquidity taken, dealing range created. So we have high to low, and I'm using the bodies of the candles in this case. All right. So the reason why we had this reaction is because we have this fair value gap inside of a premium price range on the 15-minute. Just put it as an imbalance, so on and so forth, whatever. Now, this is the new short-term liquidity that we created from the previous day. So I'm gonna put this as the previous day's low as a potential target. And I mean, of course, this is all in hindsight because we clearly saw that price went to take sell side liquidity. But at this point, we're looking on ways on which we can capitalize on this movement to the downside. Cool. All right, so we have the Asian session consolidation, meaning price is moving in a range, forming a double bottom, right? Easy retail logic right there. So there's liquidity resting below all of these lows right here. Cool. Now I'm gonna go to the 5-minute and I'm gonna let it play out until we get to 8:30. But while doing that, I'm gonna be looking for price areas in which we can capitalize off of. I don't believe price came up this high anyways, but there is this fair value gap right here that we could be eyeballing. And if price trades up into it, then we can see what happens. We'll go down to the, yeah, we'll just let it play out from here. All right, boom. All right, here. So right now, what I see, initial fake out. I'm gonna highlight the open at midnight. Now, if I'm bearish, I want to be selling at or below the open of New York. Now, clearly price traded above it. All right. Price never made it up into this fair value gap, but we did take Asia sessions high liquidity. So internal range liquidity from this high. An Asia session high. Cool. We have high, low, higher high, lower low. Price traded up into it here quickly. We have displacement creating a fair value gap. Now, this might not be like ideal because it's a little bit below Asia session. But if I would look to take an entry from this area, we have somewhat of a dealing range. And I'll use the body of the candle. All right, now we want to see if price will trade back up into the side of this area. And if not, it is what it is. All right. So price clearly left us during New York AM session. So let's see if we can find something to capitalize on the afternoon session. Simple. But let's say, for example, you were at the chart prior to 8:30. And I'm gonna highlight the 8:30 open and the 9:30 open too. So we have the 8:30 open. We have the 9:30 open. Right? Price was just basically slipping. But let's say for example, boom. We'll go back here, so this would have been a clean entry. Had we been paying attention prior to 8:30, let's say you came to the chart, and this is a clean little price action right here for the most part. We have initial fake out, price running out these lows, creating into this short-term order block. Why? To take price up above the Asian session high, grab liquidity, consolidate. We have a shift in market structure from right here, short-term high. Price trades up into it, taking liquidity. And quickly displaces to the short-term low right here, breaking structure. And this is all under 5 minute. And then we have these fair value gaps inside of this new dealing range. Right here. Fair value gap. Boom. Now you can elect if you want to take it at the open, which is the low of the fair value gap, or 50%, so on and so forth. It's just a matter of preference. Right here, I like taking it from the 50%, which is give or take right here. My stop would be above the high. Right. But a lot of times I actually use like ICT states that you can put your stop above the candle that creates the fair value gap, or the second candle, which would be right here. So that would be a total of 34 points, or 340 pips. And if you want to scale out early, it will be below this previous day's low right here for a total of 200 and let's say 255 points, give or take. But if you want to get out, yeah, 250 points, calm. you take your setup. Right here. Boom. Previous day's low. Right here. Standard deviation of 2. Giving you 250 points below the previous day's low. And if you want to extend it below liquidity, which is right here as well, that would be another 450 points, give or take. Yep. Now I'm gonna go to the 1 minute real quick. Boom, 1 minute. We have this gap right here. And we're gonna play it and wait to press the trigger. Whoa. Too fast. Way too fast, bro. So but as you can see, we did get triggered. We did get triggered indeed. Just trying something with this damn broker right here, but it ain't allowed me to get my entry where I wanted to. Either way, if you wanted to set a sell limit, you could have put your sell limit in this area. And that would have been the entry. So instantly, once you got your entry, I go to break even when I get to 50 points. 50 points is right there. Quick, fast, and in or a second. 50 piece, break even, and you let the trade ride out. I'm gonna press play. I'm gonna watch it. Now I'm gonna consider this to be a breakaway gap since price already traded up and down inside of this area. So this is a balanced price range. Now 8:30 open, new fair value gap right here. So price traded up into this fair value gap, traded away, new dealing range, short-term high, tiny fair value gap on another one right here. So let's see what happens at this candle's low right here. Go press play. Boom. Crazy shit. Right? But yeah. Then price get to liquidity in this area where we targeted for 450 points. Now on a 0.01 on US30. Oh shit. On a 0.01 on US30, that is $450. If you use a 0.1, that's $4,500. And if you use a standard, you already know that goes. All right, cool. And target is hit during the morning session. Cool. Now let's see what could happen for the afternoon session. Just doing 2 examples and that's it, bro. So we start tracing a little bit. Right into this fair value gap on the 5-minute that was created. But being that we are already kind of low, there is a potential that price could keep going lower. See short-term low. See now that high got validated. That's why you don't trade during lunch. That's why you don't trade during lunch, bro. No, we're reacting off of the previous day's low right here. Kind of like support resistance, but that doesn't really take effect. Retail take their sells right here. Oh, cool. All right. And yeah, we're currently here on price. Copy. Now for the afternoon, we could come up into here potentially and keep trading lower. We just have to see. We are inside of the fair value gap on the 4 hour as well too. But yeah, man, that's kind of all I got right now. Yeah, I'm gonna come out with another video pretty shortly. Shit's just been kind of hectic recently, even though I know I only have one video up right now. But yeah, just give me some time, isn't me? And we're gonna get to it. If y'all like this video, like, comment, share, subscribe, and if you need help, let me know. All right, bro. Stay tuned.